Welcome to Wales Institute of Science, Technology and Advanced Studies, Chennai 117. BCom online degree program, course name Corporate Accounting 1, Block 3, Unit 10 and 11, Company Final Accounts. Meaning of Final Accounts. Customarily, every business concern prepare final accounts, profit loss account, balance sheets to know profitability and financial position of the concern. Financial position of the concern. There are specified procedure to prepare the final accounts. Moreover, the company form of business concern want to prepare final accounts had the rules and provisions laid down in the Company Act 2013. Schedule 6 of such act spell out of procedure for the preparation of profit and loss accounts and balance sheets of the company. Popularly used to prepare refer to the profit and loss accounts and balance sheets. There is no statutory obligations upon sole proprietorships concern or partnership firm to prepare final accounts. As per Indian Company Act 2013 under section 228, a joint stock company have a statutory obligation to prepare final accounts. A joint stock company must conform certain legal provisions as given in the Companies Act 2013 in respect of forms and contents of the final accounts. But it will not applicable to insurance, banking and electricity company which are governed by Special Act relating to such companies. Section 128 of the Company Act 2013 requires that every company shall prepare and keep at its registered office book of accounts and other relevant books and prepare paperwork financial statement for every financial year including its branch offices. The company may keep such book of account or other relevant papers in electronic mode in such a manner as may be prescribed by the Rule 3 of the Company Accounts Rule 2013. According to accounting as per section Rule 3 of the Company Act 2013, the books of accounts and other relevant books and papers maintained in the electronic mode shall remain accessible. According to an Indian Company Act, Section 3, 2013, the books of accounts and other relevant books and paper maintained in electronic mode shall be retained completely in the format in which they were originally generated. The information received from the branch office shall not be altered and shall be kept in a manner where it shall deficit what was originally received from the branches. The information in the electronic record of the document shall be capable of being displayed in the legible form. There shall be a proper system for storage, retrieval, display or printout of the electronic records as the audit committee or the board team appropriate shall not be disposable or rendered unusable. The company shall intimate to the registrar on an annual basis at the time of filing of the financial statement. So the financial statement, namely there are different forms. The name of the service provided, the internet protocol address of the service provided, and third one the location of the service provided. Section 129 of the Company Act 2013 requires that the financial statement shall give a true and fair view of the state of affairs of the company with the accounting standard under section 133. The forms as may be provided for different classes of company in schedule 3. The financial statement shall lay before the AGM of the company for the financial year. If the company contravenes the provisions of Section 129 of the Company Act 2013, the responsible person, whoever may be, punishable with imprisonment for a term of up to 1 year or with fine not be less than 50,000 rupees to 5 lakhs rupees. Statutory books, Register of Charges, Section 85. There are different type of sections used to prepare final accounts. Register of Charges, Section 85. Register of Members, Section 88. Index of Members, Section 88. Register of Debenture Holder with Index 88. Copies of Annual Return, Section 94. Minutes Books, Section 118. Register of Contract with Companies and Firms, Section 189. Register of Directors, Manager, Secretary, Section 170. Register of Director Shareholding, Section 170. Register of Investment in Shares and Debenture of Body Corporate. Register of Loan made to other companies under the same management. Directors' Attendance Books. Constitutions of National Financial Reporting Authority. According to Section 132 of the Company Act 2013, the central government may by notification constitute a National Financial Reporting Authority. The purpose of constituting National Financial Reporting Authority to provide for matters relating to accounting and auditing standard under the Company Act 2013. The NFRA shall to make recommendations to the central government on the formulation and laying down of the accounting and auditing policies and standard for adoption by companies or auditors. They monitor and enforce the compliance with the accounting standards and auditing standards in such manner as may be prescribed. To oversee the quality of service of the proportions associated with ensuring compliance with such standard and suggest for improvement and other related matters. Compliance with accounting standard as per Section 133 of the Company Act 2013, the accounting standard recommended by the Institute of Chartered Accounting of India and prescribed by the central government in constitution with NFRA are mandatory. Financial statement according to an Indian Company Act 2013 as per Section 2 subsection 40, the financial statement in relation to a company include balance sheets at the end of the financial year, statement of profit and loss account, cash flow statement, statement of changes of in equity, any explanatory note annexed as a part of any document. So, the procedure to prepare balance sheets. The first assets and liabilities, balance sheets, position. The next profit and loss accounts. Suppose do you want to prepare more transaction is there, dividend transfer, provisions for taxation is there, means you have to prepare profit and loss appropriation account. Profit and loss appropriation account results transferred to balance sheet. But now, right now, as per accounting standard, 6th issues as per Indian Company Act 2013, the following procedure you have to make to get the financial results of the company. First one, equity and liabilities. First, particular note number, current year, previous year. Current year, previous year. Current year means during the financial year is current year. Previous year means preceding the financial year is called previous year. So, equity and liabilities. First one, shareholders funds. Equity and liability, shareholders funds. Shareholders funds, first one, share capital. There are different type of share capital, either preference share capital or equity share capital. Fully paid only, you put the note number. Next, share capital, reserve and surplus. Reserve and surplus means previous year profit brought during this year, current year profit. If any loss from current year or previous year, such a loss can adjust against the respect profit. The next, security premium if any. This is means reserve and surplus. The next, money received against share warrant. Money received against share warrants. So it is note number 3. Then share application money pending allotment. Share application money pending allotment. Next, non-current liabilities. Non-current liabilities, long-term borrowing. Long-term borrowing, debentures, unsecured creditors, unsecured loan. The next, any other long-term borrowing. So it is note number non-current liabilities. Deferred tax liabilities. Deferred tax liabilities. Other long-term liabilities without any secured creditors, it should be appear other long-term liabilities. Long-term provisions. Long-term provisions if any. Current liability, short-term borrowing. Short-term borrowing. Short-term loan. Trade payable. Trade payable means sundry creditors. Bills payable. These are all item is trade payable. Other current liabilities, outstanding expenses if any. Any other liabilities. Short-term provisions. Provision for taxation. Provision for doubtful debts. These are all item is short-term provisions. So total liabilities. Next, assets. So Roman letter 2, assets. Assets, first one, non-current assets. First one, non-current assets. Fixed assets. Fixed assets, there are different type of fixed assets. Intangible assets, tangible assets. Tangible, all type of fixed assets, tangible assets. Intangible assets, goodwill. Intangible assets, goodwill. Then capital work in progress. So suppose if given capital work in progress, so it is should be appear on the balance sheets liability asset side. The next, intangible assets under development. Intangible assets under development. Next, non-current investment. Non-current invest. Suppose if any investment is given, security is given, it should be noted to non-current investment. The next, deferred tax assets. Long-term loan and advance loan given to others. So it is note number 30 separate. So long-term loan and advances. Other non-current assets. Other non-current assets as a short-term investment. Current assets, current investment, inventory, trade receivable, cash and cash equivalents, short-term loan and advances, other current assets. Total, so total assets. A company shall disclose the following in the notes to accounts: share capital, reserve and surplus, long-term borrowing, other long liabilities, long-term provisions, short-term borrowing, other current liabilities. Short-term provisions, tangible assets, intangible assets, non-current investment, long-term loan and advances, other non-current assets, current investment. There are 14 items is there. Do you like to prepare final account balances? Advanced corporate accounting. So inventories, trade receivable, cash and cash equivalents, short-term loan and advances, other current assets, contingent liabilities and commitment, other dividend proposed, issue of securities, assets does not have realization value. Next, the schedule 3 part form of statement of profit and loss account. So statement of profit and loss account, first revenue from operation. Revenue from operation means sale of product, sale of product, sale of goods. This is called known as revenue from operation. Other income, any general income, rent received, commission received, then any other income is called other income, total revenue. The next, expenses, cost of material consumed, cost of material consumed. So you have to determine cost of material consumed formula: opening stock of raw material, add purchase of raw material, minus closing stock of raw material. If any material scrap is there, such a scrap you have to reduce from respect material consumed. The next, purchase of stock in trade, change in inventories of finished goods, work in progress and stock in trade. Next, employee benefit expenses, expenses to employee, salary to employee, remuneration to employee. This is under that employee benefit expenses. Employee benefit expenses. The next, finance cost, any expenses related to finance like interest on capital, interest on loan, these are the depreciation. This is finance cost. Next, depreciation and amortization expenses, other expenses, total expenses. So Roman letter 1, Roman letter 2 is equal to Roman letter 3. Then Roman letter 4. So Roman letter 4 means Roman letter 3 minus 4 is equal to Profit before exceptional and extraordinary items. So 3 minus 4 is equal to 5. Next, exceptional items. Profit before exceptional items and tax. Extraordinary items. Profit before tax. Tax expenses. Current tax, deferred tax, profit loss for the period for continuing operations. This is a procedure to prepare final account. First, company final accounts. Problem number 1. Following balances have been extracted from the books of Rama Limited of 31st March 2014. From the balances have been extracted from the books of Rama Limited of 31st March 2014. First, you have to find out what are the details are given the respect problem. Based on the problem, you have to identify this is should be where. So, which note you have to put first, you have to identify. Equity share capital 1 lakh shares of rupees 10 each. Equity share capital 1 lakh rupees 10 each. So, rupees 10 lakh rupees. 1 lakh into 10 is equal to 10 lakh rupees. It is under the note number 1 share capital. Security premium 2 lakhs. Security premium, it is under the head reserve and surplus. It is under the head reserve and surplus. So, note number 2, reserve and surplus. 12% debenture 5 lakh rupees. 12% debentures 5 lakh. So, debenture, sure, this is long term borrowing. So, it is note number long term borrowing. Long term borrowing. Creditors rupees 2 lakhs. It is trade payable. Creditors, it is trade payable. Proposed dividend, it is other liabilities. Surplus balance sheet statement of profit loss accounts debit balance 50,000 because the loss during the year they got 50,000. Such a loss can adjust against if any profit reserve and surplus you can adjust. Land and building, it is tangible assets. Note number tangible assets 9 lakh. Government bonds rupees 5 lakh. That is means investment. Capital working progress building 3 lakh 50,000. This is also tangible assets. Then discount on issue of 12% debentures 1 lakh. Discount on issue of debenture 12% 1 lakh. So 12,000 rupees. Cash at bank, discount on issue of debenture 12% 1 lakh. Cash at bank 50,000. It is cash and equivalents. Cash and cash equivalent 50,000. Furnitures, it is tangible assets 60,000. Debtors, it is current assets. So it is trade receivable. It is trade receivable. Debenture were issued 1st April 2013, redeemable after 5 years on 31st March 2013. The debenture were issued 1st April 2013, redeemable preferences after 5 years, 31st March 2013. Surplus balance sheet statement of profit and loss account before writing of discount on issue of debenture. Before writing of discount on issue of debenture. So, prepare the balance sheets of the company as per revised schedule 3 part 1 of the Company Act 2013. So here in these questions no need to prepare profit and loss account because all the details about profit and loss accounts is given. So profit given like security premium 2 lakhs, loss during this year 50,000 and discount on issue of debentures is given 12%. So you have to find out. First note number, you have to prepare working notes. First you have to prepare working notes. First one, equities and liability. What are the item equities liability? Whether item is given or not given. First, what are the details given? First, note number 1, share capital. Share capital, there are different type of share capital. Either equity share capital nor preference share capital only will be allowed fully paid shares. If any call in arrear is there, such a call in arrear you have to reduce from respect share capital. But here there is no call in arrear. Equity share capital only is given. 1 lakh shares at the rate of rupees 10 each. So 1 lakh into 10 rupees, 1 lakh into 10 lakh rupees equity share capital account. So note number 1, equity share capital rupees 10 lakh. Next, reserve and surplus. Next, reserve and surplus. Security premium is given, so rupees 2 lakh. Security premium is given, rupees 2 lakh. Surplus debit. Surplus means loss. So here means debit balance of profit and loss account is given. Surplus is given, but it is not a surplus. This is means loss. Loss means profit and loss account. They got loss 50,000 rupees. Discount on issue of shares, return of 20,000. Discount on issue of debentures, discount on issue of shares, return of rupees 20,000. So minus 70,000. Total 2 lakh minus 70,000. So reserve and surplus 1 lakh 30,000. Next, long-term borrowing. Long-term borrowing, 12% debentures 5 lakh rupees. So 12% debenture 5 lakh is given. So 12% debenture 5 lakh. So long-term borrowing 5 lakh. The next trade payable. What are the item trade payable here? Only Sunday creditors is given. Bills payable is not given. So creditors value is given rupees 2 lakh rupees. Creditors value 2 lakhs rupees. Next, short-term provision. Short-term provision means proposed dividend. Short-term provision means proposed dividend 50,000. So proposed dividend is given 50,000. The next tangible assets. Next tangible assets. Note number 6, tangible assets. What are the item tangible assets? All type of fixed assets is tangible assets. So here land and building 9 lakh, furniture 60,000 is given. So one more item is given. Which items? So capital work in progress building 3,50,000. Some people it is assumed tangible assets. Not allowed. It is work in progress. Capital work in progress. So under the note number capital work in progress. So 3,50,000. Land and building 9 lakh and furnitures rupees 60,000. Total note number 6 tangible assets 9,60,000. Next capital work in progress. Capital work in progress. So only building is given 3,50,000. Total note number 7 is capital work in progress rupees 3,50,000. Non-current investment. Non-current investment means government bonds. Non-current investment government bonds rupees. Government bonds how much is given? So government bonds rupees. Generally government bonds is given investment in shares Raja Limited. So government bond government bonds is given long term borrowing 12%, short term borrowing bank loan 1 lakh. Trade payable creditors. Next short term provisions. Provision for tax 50,000, proposed dividend 55,000, 1 lakh 5,000. Tangible assets land and building 2 lakhs. Plant and machinery 8 lakhs. Total 10 lakh. Intangible assets goodwill rupees 2 lakhs. Goodwill rupees 2 lakhs. Next non-current investment. Investment in shares of Raja Limited 2 lakhs. Non-current investment in shares of Raja Limited 2 lakhs. Trade receivable, bills receivable, debtors 50,000, debtors 1,50,000, total 2 lakh rupees. So first you have to prepare accounts. First you have to prepare note number. Note number means shareholder funds, share capital, reserve and surplus. Note number next, the furniture worth rupees 60,000, debtors rupees 20,000. Debenture was valued 1st April 2013, redeemable after 5 years, that is 31st March 2013. So, equity share capital 10 lakh, reserve and surplus 1,30,000, long term borrowing 5 lakhs, trade payable 2 lakhs, short term provisions, proposed dividend 50,000, tangible assets, land and building 9 lakh, furniture 60,000, 9 lakh 60,000. Capital work in progress, building 3 lakh 50,000. Non-current investment, government bonds 5 lakh. Trade receivable, debtors only 20,000. So next, balance sheets. So balance sheets of Rama Limited for the as on the date of 31st March 2014. So balance sheets of Rama Limited as on the date of 31st March 2014. So serial number, particulars, note number, amount in rupees. First, Roman letter 1, equities and liability. Equity and liability. First, 1. Shareholders funds. Shareholders funds. First, share capital. Note number 1, share capital how much? Already we got share capital rupees 10 lakh. So you put shareholder funds, share capital, note number 1, amount rupees 10 lakh. Working notes 1, amount rupees 10 lakh. Next, reserve and surplus, note number 2. Reserve and surplus, note number 2, rupees 1 lakh 30,000. Next, non-current liabilities. Non-current liabilities, long-term borrowing. Long-term borrowing, note number 3, 5 lakh. Note number 3, 5 lakh. Current liability, short-term borrowing, nothing is there, you put nil. Trade payable, like creditors, bills payable, note number 4, 2 lakh rupees. Short-term provisions, so proposed dividend is given, 5, note number 5, 50,000. Other current liability, nothing is there, so total liability value 18 lakh 80,000. Total equity and liabilities 18 lakh 80,000. Next, assets. So Roman letter 2, assets. 1, serial number 1, non-current assets, fixed assets. Non-current assets, fixed assets. Tangible assets, note number 6, 9 lakh 60,000. Intangible assets, so here is given note number, intangible assets, goodwill is there. Next, capital work in progress, note number 7, 3 lakh 50,000. Non-current investment, note number 8, 5 lakh. Current assets, trade receivable, note number 9, 20,000. Inventory, there is no inventory, you put nil. Short-term loan and advances nil. Cash and cash equivalent 50,000. Other current assets nil. So total 18 lakh 80,000. Assets 18 lakh 80,000 and liability also 18 lakh 80,000. The following ledger balances were extracted from the books of Varun Limited as on 31st March 2013. Land and building 2 lakh rupees. Land and building 2 lakhs. 12% debentures 2 lakhs. Share capital 10 lakhs. Equity shares of rupees 10 each fully paid up. Plant and machinery 8 lakh. Goodwill 2 lakhs. Investment in shares of Raja Limited 2 lakhs. General reserve 1 lakh 95,000. Stock in trade 1 lakh. Bills receivable 50,000. Debtors 1 lakh 50,000. Creditors 1 lakh. Bank loan unsecured 1 lakh. Provision for taxation 50,000. Proposed dividend 55,000. Prepare the balance sheets of the company as per revised schedule 3, part 1 of the Company Act 2013. Okay, they are asked you prepare the balance sheets. Do you like to prepare balance sheets? First you have to find out note. So land and building, sure, this is tangible assets. So note, it is note number 2, land and buildings, so it is tangible assets. 12% debentures rupees 2 lakhs, it is long term borrowing. Note 2, long term borrowing. Share capital 10 lakh rupees, it is note number 1, so share capital. Equity shares of rupees 10 each, it is fully paid up. Plant and machinery rupees 8 lakhs, it is also tangible assets. Goodwill rupees 2 lakhs, intangible assets. Goodwill rupees 2 lakhs, intangible assets. Investment in shares of Raja Limited, it is note number, investment amount. General reserve rupees 1 lakh 95,000. Reserve and surplus, note number, reserve and surplus. Stock in trade, that is means inventory. Stock in trade, inventory, that is current assets. Bills receivable, it is trade receivable, current assets. Debtors, it is current assets, trade receivable. Creditors, trade payable. Bank loan unsecured 1 lakh. bank loan, unsecured. That is means unsecured means current short term loan. Unsecured means short term loan. Then provision for tax, it is provisions. Proposed dividend, it is also current liability. Next, working notes. Note number 1. First, note number 1, share capital. What are the item is share capital? Only one item is given, equity share capital. Equity share capital, how many shares? 10 lakh rupees only is given at the rate of rupees 10 each. So 1 lakh shares at the rate of rupees 10 each, so 10 lakh. Next, reserve and surplus. General reserve is given 1,95,000. There is no any other loss. So it is fully outer column. Total reserve and surplus. Note number 2 is 1,95,000. Next, note number 3, long-term borrowing. What are the item is given? Long-term borrowing. Only one item is given. 12% debenture rupees 2 lakh. There is no any other loss. So long-term borrowing 12% debenture 2 lakhs. Short-term borrowing. So short-term borrowing, bank loan is given 1 lakh. Bank loan, unsecured creditors 1 lakh. That is means personal loan. Short term loan means personal loan. Unsecured, without any document, they are received loan from bank or other any area. It is bank loan. So schedule number, note number 4. Next, trade payable, creditors 1 lakh. Trade payable, creditors 1 lakh. So next, short term provisions. Short term provisions. So note number 6. So provision for taxation. Provision for taxation 50,000. Proposed dividend 55,000. 1 lakh 5,000 rupees. Note number 6. Short term provisions. Short term provision and tangible assets. So land and building 2 lakh. Plant and machinery 8 lakh. 2 lakh land and building. Plant and machinery 8 lakhs. So total 10 lakhs tangible assets. Intangible assets, goodwill only is given 2 lakh rupees. Goodwill only is given 2 lakh. Non-current investment. Investment in shares of Raja Limited. Non-current investment. That is means non-current investment means that is long-term investment. So non-current investment. Invested to Raja Limited. Investment in shares of Raja Limited 2 lakh rupees. So note number 9. Next, note number 10. Trade receivable. Bills receivable 50,000. Debtors 1 lakh 50,000. Total 2 lakh rupees. Next, final accounts of the company. That is means name nothing Varun Limited in the books of Varun Limited balance sheets as on the date of 31st March 2013. In the books of Varun Limited balance sheets as on the date of 31st March 2013. So first is serial number, particulars, note number, amount. Note number, amount. That is means amount in rupees. First, equity and liabilities. Roman letter 1, equities and liability. Equities and liabilities. First serial number, shareholder funds. 1, shareholders funds. Shareholder funds, the first one is share capital. Note number 1, share capital how much is given? We got it 10 lakh rupees. Note number 1, share capital 10 lakh rupees. Note number 2, reserve and surplus. Reserve and surplus, note number 2, reserve and surplus 1,95,000. Note number 2, reserve and surplus 1,95,000. Note number 3, long term borrowing. So that is means debenture only. So debenture 2 lakh rupees, non-current liabilities. Non-current liabilities, long term borrowing. Non-current liabilities, long term borrowing 2 lakh. Current liabilities, first short term borrowing. Short term borrowing, note number 4, rupees 1 lakh. Trade payable, note number 5, 1 lakh. Then other current liabilities, short term provisions 6, 1 lakh 5,000. Other current liability nothing. So total 17 lakhs equities and liabilities. Next, assets. First one, non-current assets. Roman letter 2, serial number 1, non-current assets. Non-current assets, fixed assets, tangible assets. Tangible assets, note number 7, 10 lakh. Tangible assets, note number 7, 10 lakhs. Note number 7, 10 lakhs. Note number 10, 7 lakhs. So 10 lakh. Note number 7, 10 lakhs. The next, intangible assets. So goodwill only 2 lakhs. Non-current investment. Investment to Raja Limited. Investment to Raja Limited 2 lakhs. So total, so 2 lakhs. Next, current assets. Trade receivable, note number 10, 2 lakh. Inventories. So inventory is given the respect company. Inventory is given. So how much is given inventory? So inventory means one more name, stock in trade. So stock in trade 1 lakh rupees. Inventory 1 lakh rupees. Then next, cash and cash equivalent nothings, other current assets nothings, total 17 lakhs. Balance is total, liability side 17 lakhs and asset side also 17 lakhs. Question number 3. From the following balances, prepare the balance sheets of a company in the prescribed format. Goodwill 1,50,000, it is intangible assets. Note number 1,50,000, it is goodwill intangible assets. Investment, so other non-current items, non-current assets, so it is investment, it is 2 lakh, note number investment. And share capital, note number 1, shareholder funds, that is means share capital, it is note number separate capital. Reserve and surplus, it is also shareholder funds, note number 2, 1,10,000. Security premium, it is a part of profit, it is also a part of reserve and surplus, 15,000. Preliminary expenses, rupees 10,000. Preliminary expenses, rupees 10,000. If any preliminary expenses given, it should be reduced from respect profit or general reserve. Then profit loss accounts, credit balance 25,000. Current year profit 25,000. Debentures 2,50,000. It is long term borrowing. It is non-current liabilities. It is non-current liabilities. Note number debentures, long term borrowing. Other fixed assets 4,70,000. Other fixed assets means what? So it is related to fixed assets. So separate other fixed assets 4,70,000. Stock, it is minus inventory 80,000. Debtors, trade receivable 60,000. Bank balance, cash and cash equivalents 30,000. Unsecured loan, so unsecured loan, it is a part of loan, long term borrowing 65,000. Sundry creditors, trade payable. First you have to find out note number. First note number, serial number, note to account, notes to accounts and rupees. Listen, notes to account. First share capital. What are the items share capital notes to account? One is a equity share capital, another one is a preference share capital. Here only is given equity share capital rupees 5 lakh. Equity share capital is given 5 lakh rupees. Equity share capital is given 5 lakh. The next, reserve and surplus. Reserve and surplus is given general reserve. Reserve and surplus. Reserve is 1,10,000. Security premium 15,000. Preliminary expenses 10,000. Profit loss account credit balance 25,000 is given. So reserve and surplus. So reserve and surplus means previous year profit brought during this year, that is reserve rupees 1,10,000. Next, security premium is given 15,000 rupees. It is also under the head notes to reserve and surplus account, security premium. Profit loss account, current year profit 25,000 minus preliminary expenses return of 10,000 rupees. So 25,000 minus 10,000, current year profit 15,000. So total reserve and surplus 1,40,000. Note to accounts 1,40,000. Note number 2. The next, note number 3, long term borrowing. So long term borrowing, debentures 2,50,000. Unsecured loan 65,000. Total 3,15,000. Next, trade payable. So what are the items is trade payable? Bills payable, sundry creditors, these are all the item is called known as trade payable. Notes to accounts, trade payable, creditors 35,000 only. Creditors 35,000. Tangible assets, all type of fixed assets like tangible assets. So fixed assets 4,70,000. Intangible assets given, so goodwill 1,50,000. Non-current investment 2 lakhs. Investment 2 lakhs. So trade receivable, debtors 60,000. Trade receivable, debtors 60,000. Here is other fixed assets given 4,70,000. Other fixed assets given 4,70,000. So 4,70,000 you put the other fixed assets. Next, in the books of balance sheets, in the books of dash company limited balance sheets as on the date of so and so date is not given, you put dash. First, equities and liability. Equities and liability. Roman letter 1, equity and liabilities, note number and amount in rupees. First, equity and liabilities. One, serial number 1, shareholders funds. Shareholder funds, share capital. Share capital rupees share capital, note number 1, rupees 5 lakh. Share capital, note number 1, 5 lakh. Note number 1, share capital 5 lakh. Reserve and surplus. Reserve and surplus 1 lakh 40,000. Note number 2, 1 lakh 40,000. Note number means notes to accounts, that is means working notes. So reserve and surplus 2, note number 2, 1 lakh 40,000. Non-current liabilities. Non-current liabilities. First, in the next serial number 2, non-current liabilities. Long-term borrowing. Long-term borrowing. So here is long-term borrowing. Long-term borrowing. Note number 3, 3,15,000. Current liabilities. Current liabilities. Short-term borrowing. Short-term borrowing nil. Trade payable. Note number 4, 35,000. Short-term provision is not here, so you put nil. Other current liabilities, nothing is there. So total equities and liabilities 9,90,000. Next, assets. So Roman letter 2, assets. Non-current assets. Fixed assets. Tangible assets, note number 5, 4,70,000. Tangible assets, note number 5, 4,70,000. Intangible assets, note number 6, 1,50,000. Note number 6, intangible assets 1,50,000. Non-current investment. Non-current investment, note number 7, 2 lakh. Current assets. Trade receivable, note number 8, 60,000. Inventory. Inventory, one more name, stock. So noted is not there. So 80,000. Short-term loan and advances, nothing is there. Cash and cash equivalent 30,000. Other current assets nil. So total 9,90,000. It is total assets. Next, prepare a balance sheet as 31st March 2000 from the following informations of ABC Limited as recorded under the Company Act 1956. So there are different type of details given about the companies. First, particulars, amount in rupees. Term loan 10 lakh rupees. Term loan 10 lakh rupees. Creditors 11 lakh 45,000. Advances 3 lakh 72,000. Cash and bank balance 2 lakh 75,000. Staff advances 55,000. Provision for tax 1 lakh 70,000. Security premium 4 lakh 75,000. Loose tools 50,000. Investment 2 lakh 25,200. General reserve 20 lakh 50,000. Capital work in progress 2 lakhs. Loss for the year 3 lakh 58,000. Sundry debtors 12 lakh 25,000. Loan from directors 2 lakhs. Provision for doubtful debts 20,200. Stock 4 lakh. Fixed assets written down value 51 lakh 50,000. Finished goods 7 lakh 50,000. This is the position of the business of ABC Limited as on the date of 31st March 2000. Based on the information, you have to prepare share capital consists of 30,000 equity shares of rupees 100 each fully paid up. So 30,000 into 100, 30 lakhs. 10,000, 10% preference shares of rupees 100 each fully paid up. So 10,000 into 100, 10 lakh rupees. Total share capital. Term loan is secured. Term loan is secured. Depreciation on assets 5 lakh rupees. Based on the additional information, you have to prepare balance sheets. First, notes to accounts. Notes to account. First, you have to prepare notes to accounts. Serial number, notes to account, rupees inner column, rupees outer column. Equity share capital. Note number 1, share capital. Note number 1, share capital. Equity share capital at the rate of 30,000 shares at the rate of 100 is 30 lakhs. Then preference shares, 10% preference share capital 10 lakh. Total 40 lakhs share capital. Note number 1, share capital and share capital. There are two types of share capital. One is a preference share capital, another one is a equity share capital. Total 40 lakhs. Note number 1, 40 lakhs. Note number 2, reserve and surplus. Note number 2, reserve and surplus. Security premium. Security premium 4,75,000. Security premium 4,75,000. General reserve 20 lakh 50,000 minus during the year loss 3 lakh 58,000. Balance amount is 21 lakh 57,000. Reserve and surplus, there are reserve and surplus is given. So current year profit, how much is given? Last for the year only 3,58,000. Last for the year 3,58,000. This loss can adjust against profit if any. There are two items given. One is a security premium 4,75,000. Another one is a general reserve 20,50,000. 20,50,000. So total amount 4,75,000 minus 20,50,000. Sorry, 4,75,000 plus 20,50,000 minus 3,58,000. The remaining figure is called 21,67,000. 21,67,000. This is means note number 2, reserve and surplus. The next note number 3, long-term borrowing. What are the items long-term borrowing? Term loan. So fixed loan. Then debenture. These are all items is called long-term borrowing. So long-term borrowing, term loan is given 10 lakh rupees. It is note number 3. Next, short-term borrowing. Short-term borrowing means short-term loan. Short-term loan, how much is given? Short-term loan here is given short term borrowing 2 lakh, that is means loan is given. Long term borrowing, term loan. Short term loan, then 2 lakhs. Then trade payable creditors rupees 11 lakh 45,000. 11 lakh 45,000. Here adjustment is given. Term loan is secured. So term loan is secured like 2 lakhs. Loan from director. Loan from directors 2 lakh rupees. So it is means short term loan under the head short term borrowing. The next trade payable creditors rupees 11 lakh 45,000. Next short term provisions proposed dividend 1 lakh 70,000. These are all the items no liabilities. The next assets tangible assets fixed assets 51 lakh 50,000. 51 lakh 50,000. The next note number 8 capital work in progress. Capital work in progress is given directly 2 lakh rupees. Capital work in progress. Capital work in progress is given. How much is given? Capital work in progress. Capital work in progress rupees 2 lakh. Non-current investment. Investment 2 lakh 25,200. Trade receivable. Sundry debtors 12 lakh 25,000 minus provision for doubtful debts 20,200. So remaining figure. So trade receivable 12 lakh 4,800. The next inventory. Finished goods 7 lakh 50,000, stock 4 lakhs, loose tools 50,000, total 12 lakh. Short term loan and advances. Advances 3 lakh 72,000, staff advances 55,000, total 4 lakh 27,000. So final accounts of the company. The balance sheets of Dash Limited as on the date of final account 31st March 2000. So in the books of ABC Company Limited balance sheets as on the date of 31st March 2000. As on the date of 31st March 2000. The first serial number, second one particular, third one note number, fourth one amount in rupees. First, Roman letter 1 equities and liabilities. Equities and liabilities. Equities means shareholder funds. Equity means shareholder funds. First, share capital. So note number 1 share capital 40 lakhs. 30 lakhs equity share capital, 10 lakh preference share capital, total 40 lakhs. The next reserve and surplus, note number 2, 21 lakh 57,000, 21 lakh 67,000 reserve and surplus. Non-current liability, long-term borrowing 10 lakhs, non-current liability, long-term borrowing 10 lakhs. Next, current liabilities, short-term borrowing, note number 4, 2 lakhs. Trade payable, note number 5, 11 lakh 45,000. Short term provisions, note number 6, 1 lakh 70,000. Other current liabilities, nothing. So 86 lakhs 82,000 total liabilities. Next, assets. Roman letter 2, assets. Non-current assets, fixed assets. Non-current assets, fixed assets. Tangible assets, 7, note number 51 lakh 50,000. Intangible assets. Intangible assets nil. The capital work in progress, note number 8, 2 lakhs. Non-current investment, note number 9, 2 lakh 25,200. Current assets, trade receivable, note number 10, 12 lakh 4,800. Inventories, note number 11, 12 lakhs. Short term loan and advances, note number 12, 4 lakh 27,000. Cash and cash equivalent, 2 lakhs 75,000. Other current assets, nothing is there, you put nil. So 86 lakhs 82,000. Balance is total. Next, the following balances have been extracted from the books of Genis Company Limited as on the date of 31st March 2014. Machinery 1,60,000 debit balance. Land and building 6,74,000 debit balance. Depreciation on machinery 16,000. Purchases adjusted 4 lakh. Closing stock 1,50,000. Wages 1,20,000. Sales 10 lakh. Salary 80,000. Bank overdraft 2 lakhs. 10% debenture issued on 1st April 2013 1 lakh. Equity share capital shares of rupees 100 each fully paid 2 lakh. Preference shares capital 1006% preference shares of rupees 100 each fully paid 1 lakh. The board of directors of Genis Company Limited had decided to make the following appropriation account to declare an equity dividend at the rate of 10% paid up capital. They are going to declare dividend 10% paid up capital to pay dividend on preference shares capital in full. To the transfer 2 lakh to general reserve, prepare the statement of profit and loss account for the year 31st March 2014 and the balance sheets as on the date of ignore income tax. So, first, what are the items it should be noted to respect accounts? First, you have to find notes to accounts. First, you have to find out. Machinery, sure, balance sheets as I said. It is tangible assets. It is tangible assets. Land and buildings, it is also tangible assets. Depreciation on machinery. If profit loss account depreciation, it is depreciation on depreciation. It is depreciation profit loss account. Note number sanitations. The next purchases, it should be appear in the trading accounts. It is profit loss account only. That is means raw material consumed. Raw material consumed. Wages also it is trading account. Then closing stock it is adjusted to profit loss account, adjusted to sales. Then sales, salary it is the benefit to the employee accounts. Bank overdraft current liabilities. 10% in debenture, long term borrowing, equity share capital, shareholder funds, and preference share capital also shareholder funds. First you have to prepare final accounts. First you have to prepare revenue accounts. Revenue account means revenue from operation. Revenue from operation means sales. That is means sales per product. That is means sales revenue from operations. The next note number 1, revenue from operation sales. Next 2, purchases. Purchase adjusted 4 lakh. Employee benefit expenses. What are the items? Employee benefit expenses. So wages and salary and other expenses related to employee. It is employee benefit expenses. Employee benefit expenses. The next finance cost, interest on debenture. Finance cost, interest on debenture. Interest on debenture is given. So 10% debenture issued 1st April 2013. So 10% interest on debenture 10%. 10% 1 lakh 10,000 rupees interest on debenture. Finance cost. Depreciation, amortization of expenses, depreciation on machinery 16,000 rupees. The statement of profit and loss accounts. Which company? Company name is Genis Company Limited. Profit loss accounts for the month of 31st March 2000 for the year ended 31st March 2014. First serial number, particulars, note number, amount in rupees. First revenue from operation. Revenue from operation. First you have to take which one? The note number 1, 10 lakh rupees. Note number 1, 10 lakh. The next 2, Roman letter 2, other income, nothing is there. So then Roman letter 3, total revenue A. So Roman letter 1 plus Roman letter 2 is equal to Roman letter 3, total revenue A. Revenue from operation means sales income. Other income nothing is there. Then next total revenue A. Next Roman letter 4 expenses. Roman letter 4 expenses. First one cost of goods sold. Cost of goods sold. Note number 2 purchase. Note number 2 cost of goods sold. Note number 2 purchase rupees 4 lakh rupees. Then employee benefit expenses. Note number 3 employee benefit expenses. Employee benefit means salary, wages, other expenses related to employee. It is note number 3 2 lakh rupees. Finance cost. Finance cost actually interest on capital, interest on debentures. These are all item finance cost. So interest on capital note number 2, finance interest on debenture finance cost note number 4 10,000 rupees. Depreciation and amortization expenses. Depreciation on fixed assets note number 5 16,000. Other expense nothing is there. That's all. The Roman letter 4 and Roman letter 3. So difference between Roman letter 3 minus Roman letter 4 is equal to Roman letter 5. That is means total expenses B. Total expenses B. Profit before tax A minus B is equal to 3,74,000. Total expenses rupees 6,26,000. Total revenue 10 lakh. So 10 lakh minus 6,26,000. Profit before tax A minus B is equal to C. Roman letter 6 profit before tax 3,74,000 less current year tax nil. So profit after tax 3,74,000. Profit after tax 3,74,000. Next balance is note number. First serial number. Note number 6 share capital. Equity share capital 2 lakh. Preference share capital 1 lakh. Total note number 6 share capital 3 lakh rupees. Reserve and surplus. Reserve and surplus note number 7. Reserve and surplus note number 7. Surplus amount 3,74,000. That is means profit loss account we got the profit 3,74,000 minus dividend. Proposed equity dividend is given. Full amount declared. Full message given. To pay dividend on the preference shares capital in full. They pay dividend from the share capital in full. So it is fully allowed. The next dividend preference shares how much dividend? Rate of dividend at the rate of 10%. Equity dividend 10% paid of capital. Preference share capital dividend how much is there? So preference shares capital. So 6% preference shares capital. 2 lakh into 1 lakh into 6% 60,000. So dividend 26,000 17% 4,420. Proposed preference dividend 6,000 less proposed equity dividend 20,000. Dividend tax 26,000 into 17% 4,420. General reserve 2 lakhs. Total this amount reduced from there means the remaining figure means 1,43,580. Total 3,43,580. Note number 8 long term borrowing 10% debentures to 1 lakh. Short term borrowing bank overdraft 2 lakhs. Short term provision proposed equity dividend 20,000. Proposed preference dividend 6,000. Dividend tax payable 4,420. Total short term provisions 30,420. Other current liabilities interest on debentures due 10,000. Interest on debenture due 10,000. Tangible assets machinery land and building 8,34,000. Next balance sheets. Balance sheets of Dash Limited. Balance sheets of Genis Limited as on the date of 31st March 2014. So first one equities and liabilities. Equities and liabilities shareholder fund share capital note number 6 3 lakh rupees. Note number 6 3 lakh rupees. Note number 7 reserve and surplus 3,43,000. Non-current liabilities long-term borrowing note number 8 1 lakh. Current liabilities short-term borrowing note number 9 2 lakhs. Trade payable nil dash. Short-term provisions 10 note number 10 30,420. Other current liabilities note number 11 10,000. Total liabilities 9,84,000. And assets non-current assets fixed assets tangible assets note number 12 8,34,000. Intangible assets nil. Non-current investment nothing. Current assets trade receivable nil. inventory nil, short-term loan and advance 1,50,000, cash and cash equivalent nil, so other current assets nil, so 9,84,000 total assets. A limited company was registered with authorized capital of rupees 30 lakhs. A limited company was registered with an authorized capital of rupees 30 lakhs. Equity shares of rupees 10 each. The following list of the balance extracted from the books of 31st December 1994. So 30 lakh divided 10 is equal to 3 lakh shares. 3 lakhs equity shares. Purchases 9 lakh 25,000. Purchase 9 lakh 25,000. Wages 4 lakh 24,325. It is employee benefit expenses. Manufacturing expenses 65,575. Salaries, bad debts, director fees, these are all the expenses. Salary means management expenses. Bad debts, it should be provisions. Director fees, debenture interest paid, preliminary expenses, call in arrears, plant and machinery, premises, interim dividend paid, furnitures and fitting, sundry debtors, general expenses, stock on as on the date of 1/1/94, 3,75,000, cash in and 1 lakh, goodwill 28,750, cash at bank 1,99,500, subscribed and fully called up capital 20 lakhs, profit loss account credit 72,500, 6% debenture 15 lakhs, sundry creditors 2,90,000, bills payable 1,67,500, sales 20,75,000, general reserve 1,25,000. You are required to prepare statement of profit and loss account for the year ending 31st December 1994 and balance sheets as on the date after making the following adjustment. Depreciation plant and machinery by 10%, provide half year interest on debentures and also write off preliminary expenses and make provision for bad and doubtful debts 4,250 sundry debtors. Stock on 31st December 1994 was valued at 4,25,000. Provide for corporate dividend tax 17%. First, there are different type of message given about the problem. So first, you have to find out. Note to accounts. Revenue from operation. Revenue from operations. So sales 20,75,000. Cost of goods sold. Opening stock plus purchase minus closing stock. Opening stock plus purchase minus closing stock. Employee benefit expenses. Wages 4,24,325. Salary 70,000. Total 4,94,325. Then finance cost. Interest on debenture 45,000. Add interest due 45,000. Total 90,000. Depreciation and amortization expenses. Depreciation on plant and machinery is given adjustment 1,50,000. Other expenses. Bad debts 10,550. Manufacturing expenses 65,575. General expenses 84,175. Then provision for bad and doubtful debts 4,250. Director fees 31,125. So total 1,95,675. The statement of profit and loss accounts. So first, Rome letter 1, revenue from operations, note number 1, 20,75,000. 20,75,000. Other income, nothing. So total revenue A, 20,75,000. Expenses, cost of goods sold, note number 2, 8,45,000. Employee benefit expenses, note number 3, 4,94,325. Finance cost, note number 4, 90,000. Depreciation, amortization expenses other, note number 5, 1,50,000. Expenses, other expenses 1,95,675. Total 17,75,000. This is means total expenses for B. Then profit before tax A minus B is equal to C, 3 lakhs. So 20,75,000 minus 17,75,000. The remaining figure is called known as 3 lakh rupees. Profit before tax A minus B. A minus B, profit before tax 3 lakhs. Current year tax no. So profit after tax 3 lakh rupees. Next, final accounts of company to prepare notes to accounts. Share capital, equity share capital 20 lakhs minus call in arrears given 37,500. The remaining figure 19 lakh 62,500. Reserve and surplus. General reserve 1 lakh 25,000 you put the outer column. Profit loss account. So profit loss account we got, so there's already existing profits 72,000. Current year profit we got 3 lakh rupees. Total 3 lakh 72,000. 3 lakh 72,000. Preliminary expenses 25,000 you have to reduce. Interim dividend 1 lakh 87,500 reduce. Then dividend tax 1 lakh 87,500 at the rate of 17%, 31,875 total. So the remaining figure is called known as 1 lakh 28,125. So a reserve and surplus, general reserve 1 lakh 25,000, current unadjusted profit, adjusted profit 1 lakh 28,125, total 2 lakh 53,125. The long term borrowing 16% debentures 15 lakhs. Trade payable, the next note number 10, trade payable, sundry creditors 2 lakh 90,000, bills payable 1 lakh 67,500, total 4 lakh 57,500. Short term provisions, dividend tax payable 31,875. So we can adjust. Other current liabilities, interest on debenture due 45,000. Next, notes to accounts, assets, tangible assets, plant and machinery 15 lakhs, less depreciation 1 lakh 50,000. The remaining figure is 13 lakh 50,000. Premises 16 lakh 50,000. Furniture 35,000. Total 30 lakh 35,000. Intangible assets, goodwill 28,750. Trade receivable, sundry debtors 4 lakh 36,000 minus provision for bad and doubtful debts 4,250. Balance is 4 lakh 31,750. Cash and cash equivalent, cash in hand 1 lakh, cash at bank 1 lakh 99,500. Total 2 lakh 99,500. Next, final account balance sheets as on the date of 31st March 2014. 31st March 2000, 31st December 1994. 31st December 1994. Next, serial number 1, Roman number 1, equity and liabilities, note number and amount. First, shareholder funds. Share capital, note number 7, 19 lakh 62,500. 19 lakh 62,500. Reserve and surplus, note number 8, 2 lakh 53,125. Non-current liabilities, long-term borrowing, note number 9, 15 lakhs. Current liabilities, short-term borrowing, nothing is there. Trade payable, note number 10, 4 lakh 57,500. Short-term provisions, note number 11, 31,875. Other current liabilities, note number 12, 45,000. Total 42 lakhs 50,000. The next, current assets, non-current assets. Non-current assets, fixed assets. Intangible assets, note number 13, 30 lakh 45,000. 30 lakh 45,000. Intangible assets, note number 14, 28,750. Non-current investment, nothing is there, you put nil. Current assets, trade receivable, note number 15, 4 lakh 31,750. Short-term loan and advances for inventories 4 lakh 55,000. Short-term loan and advances nil. Cash and cash equivalents, note number 16, 2 lakh 99,500. Other current assets nil. Total 42 lakhs 50,000. The following is the trial balance of ABC Company Limited as on the date of 31st December 1994. Prepare the statement of profit and loss account and balance sheets. First you have to go through, you have to identify. So the which items should be notes to accounts, first you have to identify. Authorized share capital 50,000 shares of rupees 10 each, 5 lakh. 50,000 shares of rupees 10 each, 5 lakh. But subscribed capital 10,000 shares of rupees 10 each, rupees 1 lakh. So authorized capital do not affect in accounts, but you put there. But call in arrears 6,400. This amount should be reduced from respect 1 lakh equity share capital. Land, tangible assets. Building, rupees 25,000 tangible assets. Notes to tangible assets. Machinery also tangible assets. Furniture also rupees 3,200 tangible assets. Carriage inverse. Carriage inverse, it should be reduced. So it is general expenses for preparation of revenue income. Wages like management employee expenses. Salary also employee benefit expenses. Bad debts reserve 1,1994,400. Then sales, it is the income, revenue income 80,000. Sales return you should reduce from respect sales. Bank charge, it is finance expenses. Goal, it is general expenses. Rate and tax, general expenses. Purchase, it is manufacturing cost. Purchase return reduced from respect purchase. Bills receivable, trade receivable. General expenses, other expenses. Sundry debtors, trade receivable. Sundry creditors, trade payable. Stock, as on the date of opening, you have to find out direct material consumed. It should be had to respect purchase less closing stock. Fire insurance premium, general expenses. Cash at bank, so cash and cash equivalent note to cash in and note to. So the next security premium, it is reserve and surplus, general reserve and surplus. So charge depreciation on building 2.5% on machinery, 10% charge depreciation on building 2.5%, machinery at 10% and furniture 10%. All the depreciation it is reduced from respect assets, it is noted to tangible assets and it is profit and loss account debited like should be amortization and depreciation. Carry forward the following unexpired amount, fire insurance, so 120. Provide liabilities, wages 320, outstanding expenses, salary 500, rate 200. Then value of stock, closing stock 30,000. First, notes to accounts. Revenue from operation, sales. Revenue from operation, sales 80,000, sales return 1,700. So 80,000 minus 1,700, remaining figure 78,300. Cost of goods sold. Opening stock rupees 25,000. Add purchase. Purchase means purchase rupees 50,000. Purchase return 3,400 is given. So remaining figure 46,600. Add carriage inverse. 2,300. The remaining figure is called known as total amount 25,000 plus 46,600 plus 2,300. The remaining figure 73,900 minus closing stock 30,000. The remaining figure 43,900. That is means cost of goods sold or direct material consumed. Employee benefit expenses. What are the items is employee benefit expenses? Wages add outstanding, salary add outstanding. Salary outstanding adjustment is given. So actually outstanding expenses it is shown on the current liabilities. Under the head balance sheets. But outstanding expenses it should be added to respect expenses to employee benefit expenses. Next, depreciation and amortizations of expenses. Depreciation on building 2.5%, depreciation machinery 10%, furniture also depreciation is given. The total depreciation 2,445. Other expenses, bank charge 100, gold 700, rate and tax plus outstanding expenses 1,000, general expenses 1,900, fire insurance premium less prepaid 120, 280, new provision minus old provision for bad and doubtful debts 740. Total 4,720. The statement of profit and loss account, serial number, particular, note number, amount in rupees. First, revenue from operation. Note number 1, revenue from operation. How much is given? We got 78,300. Revenue from operations based on the sales, we got 78,300. Note number 1. So note number 1, 78,300. Note number 1. Revenue from operation, note number 1, 78,300. Other income, Rome letter 2, other income nil. So you put nil. The total revenue, Rome letter 1 plus Rome letter 2 is equal to total revenue A. So Rome letter 3. The next, Rome letter 4, expenses. Cost of goods sold, note number 2, 43,900. Employee benefit expenses, note number 3, 29,700. Finance cost nil. Depreciation and amortization expenses, note number 4, 2,445. Other expenses, note number 5, 4,720. Total expenses B rupees 80,765. So total income revenue 78,300, but total expenses 80,765. So loss A minus B is equal to 2,465 loss. So the next it is not applicable tax to pay because loss means cannot adjust. The next balance sheet position. Note to balance sheet position. First share capital. Equity share capital 1 lakh. Call in arrears 6,400. The remaining figure 93,600. Reserve and surplus. General reserve 24,000. Security premium 6,000. Total 30,000. Minus current year loss 2,465. The remaining figure 27,535. The next trade payable. Trade payables sundry creditors 13,200. Bills payable nothing, so 13,200. Then other current liabilities, wages outstanding, salary outstanding, rate and rents outstanding 200, total 3,900 other current liabilities. Next tangible assets, land and building minus depreciation, machinery minus depreciation, furnitures minus depreciation. The remaining figure total 50,755 is called known as tangible assets. Next trade receivable, bills receivable 1,200, sundry debtors 42,800 minus 2,140, provision per bad and doubtful debts. Remaining figure 40,660, total 41,860. Cash and cash equivalent, cash in hand 13,000, cash at bank 2,500, total 15,500. Other current assets, prepaid insurance 120. So the books of balance sheets as on the date of 31st December so and so date. Final accounts. Equity and liability, shareholder funds, share capital, note number 6, 93,600. Reserve and surplus, note number 7, 27,535. Next, non-current liabilities, long-term borrowing, so nothing is there. Current liabilities, short-term borrowing, nil. Trade payable, note number 8, 13,200. Then short-term provision is nil. Other current liabilities, note number 9, 3,900. Total 1,38,235. Assets, non-current assets, fixed assets, tangible assets, note number 10, 50,755. Intangible assets nil, non-current assets nil. Current assets, trade receivable, note number 11, 41,860. Inventories 30,000. Short-term loan and advance nil. Cash and cash equivalent, note number 12, rupees 15,500. Other current assets 120. So total assets value 1,38,235. The following trial balance of NIL Limited as at 31st December 1994-8 is given to you. So first go through the respect debit and credit balance. You have to learn something from the question. Stock as on the date of 1/1/1998, it is, while compute cost of goods sold, you have to apply with purchase. So note to accounts, calculation of cost of goods sold. Bank, it is current assets 17,600, cash and cash equivalents. Patents, it is intangible assets. Call in arrears. So if any call in arrears there, such a call in arrears you should reduce from respect share capital. Return inwards, that is means sales return. You have to reduce from sales return. So revenue. So sales you have to reduce from respect sales. Note to sales account. Notes to sales account. Purchase. Purchase, it is calculation of cost of goods sold. Then wages, employee benefits accounts, employee benefits expenses, insurance prepaid expenses, insurance prepaid, so it is current assets, bills receivable, it is current assets, sundry debtors, it is current assets, discount on issue of debenture, it is accumulated loss, it should be reduced from respect profit. Plant and machinery, current assets, that is tangible assets, accounts to tangible assets. Land and building, tangible assets. Insurance, expenses, other expenses. general expenses, other expenses, establishment expenses, other expenses. 8,000 equity shares of rupees 100 is rupees 75 paid, 6 lakh. 6% debenture long-term borrowing, sundry creditors, trade payable, general reserve and surplus, sales, income from revenue, return outwards, purchase return, it should be reduced from respect purchase, profit and loss account credit 12,000, reserve and surplus. The total, the value of closing stock 31st December 1998 was rupees 74,000. It is closing stock. So it should be reduced from respect opening stock plus purchase minus closing stock. Outstanding wages total 10,000 rupees. It should be added to respect wages and should be appear on the balance sheet liability side like current liabilities. A provision 5% is to be created on sundry debtors for doubtful debts. Such a provision it should be debited to other expenses and profit loss account and should be appear on the balance sheet by way of reduced from respect sundry debtors. Depreciate patent 10%, plant and machinery 7.5%, land and building 4%. It is tangible assets. You are required to prepare statement of profit and loss account for the year ended 31st December 1998 and balance sheets as on the date. First, notes to revenue accounts. Notes to revenue account. Revenue from operations, sales 10 lakh, sales return 30,000. The remaining figure is note number 1, 9 lakh 70,000. Cost of goods sold, opening stock 80,000 plus purchase minus purchase return 7 lakh 52,000, 8 lakh 32,000 less closing stock 74,000. Total 7 lakh 58,000 is called known as cost of goods sold. Next, employee benefit expenses. What are the items in employee benefit expenses? Wages plus add outstanding expenses. Wages 1 lakh 8,000, outstanding expenses 10,000, total 1 lakh 18,000 rupees. The depreciation and amortization expenses. Depreciation on land and building 12,000, depreciation on plant and machinery 30,000, depreciation on patent 6,000, total 48,000. Other expenses, insurance, general expenses, establishment expenses, provision for doubtful debt rupees 4,000, total 1 lakh 8,000. So preparation of statement of profit and loss accounts, serial number, particular, note number, amount in rupees. Revenue from operation, note number 1, 9 lakh 70,000. Other income nil, total revenue A 9 lakh 70,000. Expenses, cost of goods sold, note number 2, 7 lakh 58,000. Employee benefit expenses, note number 3, 1 lakh 18,000. Finance cost nil. Depreciation and amortized expenses 4, note number 4, 48,000. Other expenses, note number 5, 1 lakh 8,000. So total expenses 10 lakh 32,000. Total revenue 9 lakh 70,000. 9 lakh 70,000 minus 10 lakh 32,000. 62,000 they got loss. So loss. Next balance is. So note number 6, share capital. Equity share capital 6 lakhs. Call in arrears there 20,000 reduced from respect shares. So 5 lakh 80,000 share capital. Reserve and surplus. General reserve 80,000. Current year, previous year profit brought during this year 12,000 minus a current year loss 62,000. Unadjusted profit loss rupees 50,000. These loss can adjust against general reserve 30,000, 50,000. The remaining reserve and surplus, note number 7 is 30,000. Long-term borrowing 6% debenture 2 lakh. Next, trade payable, sundry creditors 1 lakh. Other current liabilities, outstanding expenses if any and adjustment, it is other current liabilities 10,000 rupees. The next note number 11, tangible assets, land and building 3 lakh, less depreciation 12,000. Plant and machinery 4 lakh. If any depreciation is there, such as depreciation you should reduce from respect assets. 4 lakh minus 30,000, so 3 lakh 70,000. Remaining figure 6 lakh 58,000. Intangible assets, patent less depreciation. Intangible assets, patents less depreciation 60,000 minus 6,000, 54,000. The trade receivable, bills receivable 30,000. Sundry debtors minus provision for bad and doubtful debts 4,000, 76,000. Total 1 lakh 6,000. Other current assets, prepaid insurance 400, discount on issue of debentures, that is means accumulate loss 10,000 rupees. This is not a debentures. Debenture is accumulate loss 10,000 rupees, 10,400. So balance is serial number, particulars, note number, amount in rupees. Equity shares, liabilities, equity and liabilities, shareholder funds, share capital note number 6, 5,80,000, reserve and surplus note number 7, 30,000. Next, non-current liabilities. Non-current liabilities, long-term borrowing, note number 8, 2 lakh rupees. Current liabilities, short-term borrowing, nil. Trade payable, note number 9, 1 lakh. Short-term provisions, nil. Other current liabilities, note number 10, 10,000. Total 9 lakh 20,000. Assets, non-current assets. Fixed assets, tangible assets, note number 11, 6 lakhs 58,000. Intangible assets, note number 12, 54,000. Non-current investment is nothing is there. Next, current assets. Trade receivable, note number 13, 1 lakh 6,000. Inventory, note number, nothing is there. So because trial balance is given 74,000 closing stock. Then short term loan and advances nil. Cash and cash equivalents 17,600 is given trial balance. Other current assets 14, note number 10,400, total 9 lakh 20,000. Thank you.